Mr. Boucher, I'd like to welcome you and your team today, and I would like to recognise the ongoing increase in the performance of Bank of Ireland across a range of metrics. I think that is to be recognised. For me, and I think for the members of the committee as public representatives, the concern is some of that performance is coming at the cost of people who were unfortunate enough to borrow too much money from Bank of Ireland during the bubble, which is really what this is about, the arrears targets. And my concern is that the arrears, the huge arrears that the Bank of Ireland has, that the various other lenders has, the arrears is the symptom. It's not the problem. The problem is we have a huge number of households out there, be they in arrears or, as was mentioned earlier, struggling to stay out of arrears. The problem is they owe too much money relative to their income. So I don't believe that offering people these type of solutions is going to solve the problem. I believe that reducing their debt levels relative to their household income is going to solve the problem. So I'd like to go through the figures that you presented to us. The 12,700 restructures are in place. About 3,600 of them, about 30% of that is interest only. Would you accept that moving people to interest only ultimately increases the total amount paid by a borrower to your bank?
I don't think it does mathematically if the customer is servicing the interest.
The total amount paid, if you're on capital and interest, you go on interest only for 2 years. You then go back to capital and interest.
Pardon, the absolute cost of credit.
Yeah.
The absolute cost of credit for a term extension, for anything of that nature, absolutely increase the absolute cost of credit. Yeah. So, as my colleague Stephen Mason explained, we sit down with the customer.
Wait, I don't need to go through that. Okay. I just want to know, do you agree that putting someone on interest only for a period and then moving them back and they pay out the capital and interest over time actually increases the total payments to the bank over the period of that mortgage?
It does, Deputy.
Thank you.
I beg your pardon, Deputy.
Thank you.
Deputy,
I've only got 7 minutes.
The context is to deal with the cash flow issue.
I understand. I'm going to move on. Thank you. There's another 20% which are reduced payment, and obviously these are temporary as well. So in this case, the amount of capital being paid, let's say over an 18-month period, is reduced. The full interest is paid. And therefore, would you agree that in this case as well, the total amount paid by a household to the bank over the term of the full mortgage will be higher than the original mortgage envisaged?
Yes.
Thank you. Term extension. They pay capital and interest, but they pay the capital over a bigger period of time, 30%. So we're now up to 80% of all restructures. Would you agree that term extensions also increase the total amount that a household will pay relative to what was expected when the mortgage was taken out?
Unless, if I can help the Deputy, because I know you have limited time, if the bank does not write off debt,
absolutely,
then the total amount of repayment will increase.
Yeah.
What the bank does do is to ensure and try to model the solution in accordance with the envisaged cash flow.
I appreciate that. There's another about 10%, so this is now 90% of all restructures, which are recapitalisation of arrears. Would you agree that when that is fully paid down, that the total amount paid by the household, again, to the bank, is higher than the total amount envisaged when the mortgage was taken out?
As I mentioned earlier, Deputy.
Unless there is a write-down.
Unless there is a write-down.
Okay.
Then the total repayment to the customer increases.
Thank you. So 90% at least actually increase the total payments from the household. These are the restructures. At least 90% increase the total payments from the household to the bank. So in terms of sustainability, in terms of addressing the fact that households have too much debt, too many payments, 90% of your restructures at least actually increase the level of indebtedness of these households. The 10% that's left, we don't do the full breakdown. On the split mortgage, can you confirm that can you tell us, is the interest charged on the shelved portion market interest, the same as the interest paid on the non-shelved portion?
Yes.
Okay. So in fact, that's not a split mortgage at all. You're taking a mortgage, you're splitting it in half, you're saying you're paying the full interest at market rate on the full capital amount. As to Deputy McGrath, there's no reduction in the amount being paid there either. Do you do voluntary surrenders?
There's a cash flow reduction.
Sure,
Yeah.
but actually, again, the household ends up paying more money to the bank. Do you do voluntary surrenders?
Sorry, Deputy, as does the bank. Because each of these resolution structures cost the bank money as well.
Do you engage in voluntary surrenders?
Yes.
And does the bank pick up the difference between the amount owed and the sale value, or does the borrower?
The borrower.
For AIB, for your information, it's the bank. And also for AIB, they charge 0% on the split, which actually makes it something that lowers the total amount to the bank. You see, Mr. Boucher, here's my problem. You said earlier on that we made a lot of mistakes. We, Bank of Ireland, made a lot of mistakes. And these restructured mortgages are those mistakes. We're seeing them, and obviously there's a lot more. But it turns out that in at least 90%, and I'll bet you it's 99%, you're going to profit from those mistakes.
More.
Because all of these households are not only going to pay the bank all of this money back, which you said a lot of these were mistakes. Obviously the borrower made a mistake in borrowing it, but the bank, by God, they made a mistake in some of the lending.
Deputy, I beg your pardon. I've actually just said that the forbearance costs the bank money. They do cost the bank money because we have to borrow the money. If we're not getting amortisation in accordance with our expectations, we have to borrow the money in the market or pay deposits. So it does cost us money. Every forbearance costs us money. That is why it is disclosed in our accounts, because it's an important issue for investors.
It may cost you more money in some cases, but in other cases it would cost you less money. For example, on interest only. If the interest you're getting from the borrower is less than the amount that you can borrow from the ECB, for example, that interest only is not costing you money. You are profiting from that. The total profit, the total net present value of those mortgages to the bank increases.
Deputy, if I could just answer that question.
Yeah.
Or again, to be helpful, I said that the vast majority of our arrears customers are on a tracker. I said that the average cost, all-in cost of a tracker is 155. In our accounts at the end of June, we said that the total cost of money to the bank is 161 basis points. So they are costing us money.
Okay,
Tracker mortgages cost us money.
Nonetheless, Mr. Boucher, the point I believe that the government is trying to address with the arrears targets, I believe it's the wrong approach, but I believe they are doing it in good faith, and they are trying to deal with the fact that there is too much unsustainable household debt out there. The solutions which Bank of Ireland has offered in at least 90% of the cases, and I bet you it's more, actually increase the total amount that those households will end up paying Bank of Ireland. If I were in your position, or if I were a shareholder of your bank, I would think that's fine. I accept that that is the sensible thing to do for you. However, for us as public representatives, actually allowing you increase the total amount that these households pay you is wrong. Can I ask you finally, Chair, I know I'm running out of time.
Actually, all the time.
The key to this is sustainability. One of the questions which hasn't been asked is how Bank of Ireland defines sustainability. So let me give you very quickly, for example, 30 seconds. Okay,
I'm going to give you 10 seconds. And
thank you, Chair. Can I ask you, Mr. Boucher, how does the bank define sustainability when it is deciding what restructured offers to make to borrowers?
Would it be possible my colleague could answer that?
Yeah, and again, we're back there to the process whereby we go through a detailed process with customers that we find out what they can afford, and we match that affordability to the sustainable options that we can offer customers. And if that matches, then we have a sustainable solution. But we don't just do it on the basis of conversations. We do it on a rigorous assessment of the customer's income and outgoings, and then matching that to what we can offer.
How do you define afford?
Well, we talked about what the standards of living are. So we have our standard of living guidelines, and we look at the family unit, and we look at what the family themselves say they need to spend, and we look at what's left, and then we apply that affordability that the customer has to the solutions that we have available. And if they match...
Can we see those guidelines?
No, please. I'd say this to members.
Okay.
If you do wish to split your time, you do have to split your time. Deputy Richard Boucher.
Thanks, Chair.